I send you my presentation.
Good evening, future Maryland home buyers, and thank you so much for being here. I am Jackie Muick, Advocacy and Communications Administrator for Maryland Realtors. I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is Elaine Williams, a realtor with Realty One Group Performance, Paul Defkin, a lender from Vela Mortgage, Jim Hall from Freddie Mac, and Frank Bamunde from Maryland Department of Housing and Community Development, also known as DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees after the conclusion of the webinar. We encourage your questions and we look forward to answering them. Please post all your questions in the Q&A box below at the bottom of your Zoom screen. With that, I'll turn it over to our Realtor member, Elaine.
Thank you, Jackie, and thank you everyone on the call, especially our future homeowners. My name is Elaine Williams with Realty One Group Performance, and I am here to tell you the 10 simple steps on purchasing a home. I'm going to share my screen here. So about me, I am born and raised here in Washington, D.C., so I am a Washingtonian, but I am also a resident of Charles County and Prince George's County. So I do know the Maryland area. I am going to touch on the importance of becoming a homeowner. One, why pay someone else rent when you can be you can purchase your own home and lower your paying on your mortgage, right? So when you come to purchasing a home, buying a home versus purchasing a home, renting a home, my apologies. I need to go down to buying versus purchasing. Renting versus purchasing a home. When you're renting someone's home, you're paying their mortgage down. You have the possibility of your rent increasing every year. Whereas though you can take that same money that you use to rent this home, because when you're renting, you have to pay the first month's rent plus security deposit. First month's rent could easily be anywhere between $2,000 and more, depending on how much you're willing to spend on rent. And the your security deposit can equal that amount. So that's around $4,000 that you can use to purchase your own home. And sometimes the mortgage is less than what you're going to spend on renting. And how you become a homeowner. You have simple steps. First thing first, we want to make sure your credit is where it needs to be so that you can start the pre-approval process with the lender. But I have, these are the 6 steps. First thing first, pre-approval. You meet with a lender, determine the right mortgage, get a pre-approval letter, right? If your credit is not where it needs to be, the lender will help you get to where you need to be able to get a mortgage. If you want to qualify for down payment assistance programs, most programs you need a 640 FICO score in order to be approved for. So if you're not at a 640, the lender will be able to let you know, hey, I need you to do this in order to get your credit. I need you to work on your credit. This is what I need you to do to get here. Once you're at that point, where as though you're ready to get financing, you'll receive a pre-approval letter. Next, you'll meet with me, the realtor. Before we even go out and look at properties, we have to do a buyer agency agreement form. And that basically states that I represent you and not the seller. Therefore, I can disclose more information about the property. I could take you out to view properties. I can negotiate on your behalf. I can send you properties, and I can write contracts on your behalf. Once you sign that document, then that's when I'll send you a list of homes from Bright MLS. That is the database that that realtors use. And I can also set you up on automatic emails. That way, if I'm out in the field, you're receiving emails twice a day with active properties that are coming soon to the market. You let me know which ones you're interested in. I do my due diligence to make sure that that property works for you and the loan that you have. Because depending on where you're purchasing at in Maryland, some properties are not FHA approved. And the reason why it's not FHA approved is because of the percentage, the delinquency rate in that community. And when I say the delinquency rate, the HOA or the condo fee has not been paid a certain amount. 25% of the homeowners in the entire community have not paid their condo fee. So if you have an FHA loan, that property will not work for you unless you can put down 20% of the purchase price. But outside of that, if the property works for you and the seller, I make sure the seller is willing to do seller concession. Seller concession means that the seller will give you money towards your down payment and closing costs. Your closing costs, not even your down payment, but give you money towards your closing costs. I also make sure that the seller, when we do our home inspection, that if anything come back that needs work done, especially your systems, that the seller is willing to pay to get those items repaired. If they're not willing to do that, then I let you know, do you want to move forward? You let me know yes or no. I strongly suggest getting a home inspection. Then we'll move forward. We'll tour the properties once we know everything that the seller is willing to do. We'll tour those properties. If you love that property, we'll start with submitting a strong offer. Yes, your offer want to be strong because who knows how many of our buyers are going to submit an offer for that same property. So you always want to submit your highest and best offer, but in real estate, everything is negotiable. So once we submit the offer, we want to make sure your earnest money deposit is strong. Your earnest money deposit is to show good faith that you're serious about purchasing this home. And also, you use that money, that earnest money deposit, if we go through the whole process, that earnest money deposit goes towards your final numbers. Typically, the earnest money deposit is 1% of the purchase price, or maybe higher. If you want your contract to look attractive, you're going to put a little higher down. You can actually put down the most that you're going to be putting down for your closing costs or your down payment, right? So that is one of the things that we want to put down. But also know that with that earnest money deposit, you may lose your earnest money deposit because you have 3 contingencies. You have your inspection contingency, you have your finance contingency, and you have your appraisal contingency. So if you go to, when we get the home inspected, once your offer is accepted, we will get the home inspected. And when we get the home inspected, say if something come back and the seller is willing to make those repairs and you agreed upon it, we can move forward. You will not lose your earnest money deposit. But say the seller do not want to do it, you can back out of the deal. Now say the same thing goes for the appraisal. your appraisal may come back lower than the purchase price. We can ask the seller to lower the purchase price to lower the appraisal to the appraisal, the purchase price to the appraised value. The seller may say yes, and the seller may say no. If the seller say yes, we move forward. If the seller say no, we can back out of the deal and you will not lose your earnest money deposit. Then you have your finance. Sometimes when you start the process, your finances are in order, your credit, everything is in order, right? But just say some things happen where you may take a pay cut or your credit score may drop below the FICO score that you originally started with. You can back out of the deal because you have a contingency. So say the seller is open to doing everything that you're willing to, you're asking them to do, and you decide to back out of the deal. The seller can request to keep your earnest money deposit. Of course, we do not want the seller to keep your earnest money deposit, but you have to think about this. The seller took the time out to take his home off the market with hopes of you purchasing their home. So we have to be mindful and considerate of that seller's situation as well, because depending on when you close, that seller is still responsible for that mortgage, and the seller still have to pay the mortgage every month until we go to closing. Once we are ratified, the next step is getting the home inspected. When we go in the home, of course, we think everything is just beautiful, right? I'm not an inspector, you're not an inspector. So that's why it's very important to get an inspection, because an inspector could come in and they can use their little specialty tools and they could tell us whether the roof is damaged. They'll let us know if it's water damage, mold, if the electricity, if you have any electrical problems. Also, they'll let us know if the HVAC unit or the furnace is working properly, or if it needs to be replaced because of the life expense of the those features for the HVAC, the furnace, and the hot water heater. So that's why it's very, very important to get a home warranty. Also, you want to get your home inspection. A home warranty, you definitely want to get a home warranty. You definitely want to get a home insurance, because even though it's similar, the home insurance is going to cover the home, right? And let me go down to so your home insurance, it protects your home and possession in case of damage and theft, right? And the lender typically requests that you get a home insurance as part of your mortgage, right? But a home warranty covers your appliances. It could cover your roof. It could cover plumbing, electrical. So that's why it's very important to get a home warranty, especially when you're purchasing a resale property. While we're here, I'm going to touch on closing calls, because I skipped over that. So your closing costs are the fees and expenses beyond the down payment that you'll need to pay when finalizing the purchase of your home. These include your lender fees, your title insurance, your appraisal fees, inspection fees, taxes, and attorney fees. Down payment. Your down payment can range anywhere between 0 to 20%, depending on what type of loan you have. If you have a VA loan, you can get your down payment will be 0%, but you still have closing costs, right? If you have a conventional loan, your loan could be 3% or more, depending on your credit score. FHA is the most one of the most popular loans that you have, and that is 3.5% down payment, and then it goes up depending on how much you want to put down. The larger your down payment is, the less you'll need to borrow, which can result in lower monthly payments. Okay. Next step is pre-closing. We'll confirm that the repairs are made. Once the repairs are made, we will do a re-inspection. That means the inspector will come out and do a re-inspection. He will make sure all the repairs that we requested the seller to repair are repaired. And then he will pass the home inspection. Then we'll do our pre-closing walkthrough. We normally try to do that between 5 days before closing to make sure the home is in the same condition it was in when you submitted your offer. Then you send your funds to the title company. That is your final call, your closing costs. So the lender and the title company will let you know how much you have to come to the table with. Once we go to closing, you will review your closing documents, sign the closing documents, and guess what? You are now the homeowner. There are several programs that most homeowners, most home buyers do qualify for. One being the most popular one in Maryland, which is the Maryland Mortgage Program. And under that umbrella, you have several different programs that you may qualify for, depending on your FICO score. And of course, our lender will touch you on that. But when we start this search, I think it's very important to be open-minded and, don't get frustrated. A lot of people get frustrated because the homes that they're thinking about and they want to submit an offer on, and they do submit an offer on, another buyer may come with a better offer. And they get frustrated because don't think because the first home we see and this is the home, like this is the one I want. And you submit an offer and that home, someone else get that home. Guess what? Just like that home came on the market, it's going to be another home that you're going to absolutely love, that you're going to submit your offer and you will get it, but you have to be patient.
All right, thank you so much, Elaine. I do think we need to move on to the Q&A. We have no questions so far, but if you have one, please go ahead and put it in the Q&A box at the bottom. We will get to it. But Elaine,
Yes.
first-time home buyers especially have to deal with a lot of advice from family, from friends, from coworkers about how do you find a home, who do you work with, and everything else. How does a realtor help navigate all of those opinions, solicited or unsolicited, that first-time home buyers often receive?
Okay. So with that being said, yes, you have your family members. They're gonna, especially the ones who've already purchased a home. So they think they know all the ins and outs, but every year things changes, right? And I am the expert. So I'm going to guide you in the right direction. We're going to make sure that you're able to purchase something that you can afford and you will not be house poor. Your first home, it may not be the home that you want, but this is your starter property, right? And you can get that, you can purchase that home. And when you purchase that home, if it's not the one that you want long term, you can either lease that home or you can sell it and use the proceed to purchase your next home. And you can build your real estate portfolio.
Awesome. Also, so in a real estate market that's as competitive as it has been for especially the past few years, how do you help your buyers stay motivated when their home search might take a lot longer than they expected, or maybe the timeline doesn't work out, or what they thought, maybe they found what they thought was their dream home online, and you're managing those expectations?
Well, what I do, I constantly could have a conversation with my buyers and just tell them to be open, right? Because just because this home didn't work, it's a home out there for you. Sometimes you may have to scale back on what is not a necessity. and focus on, strong bones, because we want a home that have good bones, right? And it may not, like I said, it may not be your forever home, but it's your starter home. And we're going to get you there. And just stay in there for 5 years. After 5 years, sell it, lease it, And when I normally tell my buyers that, they think about it. They be like, you know what, Elaine, you're right. I'm not going to stay in this for 5 years, but we're not going to just put you in anything, because I'm not going to put you in anything that I wouldn't buy for myself. But we're going to make sure it's the best fit for you. And it has majority of the qualifications and things that you're looking for, right? So yes.
How do you help buyers kind of create that list of wants versus needs when navigating, especially their first home?
So basically, I tell them to write it down. Your pros and cons. What are your wants? What are your needs? If we cannot meet everything, what are you willing to subtract from this purchase? Because we have buyers, they want it all, but depending on the financing, you may not be able to get it all, right? You may not, in your first home, you may not be able to buy what you really want the first go around. So they do their list and they let me know. They said, okay, Elaine, I'm willing to go, I'll take this as long as I have this, and we try to make sure we have the needs versus the wants. And if we can get the wants, that's a plus, that's a bonus. Our focus is to do both. But if we can't, we're going to make sure you have your needs.
Wonderful. Thank you so much. We do need to move on. But we will be able to, any questions that come through, like maybe you think of something in another presentation, Elaine is going to be able to be sticking around till the end, and we'll have another larger Q&A for any of our presenters this evening. So with that, we're going to pass it over to Paul. Thank you so
Thank
much.
you.
Can you see me? Can you hear me?
Yes, we can.
Okay, awesome. So oops. New screen. All right. Hello. Thank you so much, Jackie and Frank and everybody else for inviting me to be on this panel. And my name is Paul Defgin. I'm with Vellum Mortgage. We are a direct lender out of Rockville, Maryland. We help a lot of homeowners purchase their first home, or current homeowners purchase their new home. A little bit about us. This is the Yi team. We're a branch of Vellum Mortgage. Let me just see if I can find here. So the first step of meeting with a potential person that is interested in purchasing a home is to have a conversation with them. We meet with them, we talk about their plans, their goals, but the main thing is like really understanding what their fear are, where their budget is. And that's the first step when we're meeting with a client, is to have that conversation first, and know more about them know more about us. And then we can come up with a game plan to help them purchase their home, whether it's going to be their first or their new home, if they're a repeat homeowner. What we ask them to do is to complete an online questionnaire. Sometimes we'll help them do it if they're not very computer savvy. We can also meet in the office if they want to do that. Given the current market, we sometimes do what we're doing today, which is a Zoom call, which we find that that's pretty awesome because most people can't travel to Rockville. And once we've had that conversation, we ask them to provide some documents with regard to their finances, their resources. And then after we get those information, we'll review them, Usually it takes about 24, 48 hours to come back with a game plan, and we'll hop back on a call, go over that game plan, answer any questions. We talk about the total cost of purchasing a home, depending on what their price range that they're targeting. Now, our job when we're meeting with clients and we're going through all of this, we always tell them upfront that they may have a budget, and let's just say that they're looking at a certain price range, but our job is to qualify them for the maximum. And the reason why we want to do that is to help them know that when they're out there with their real estate agent looking for property, that if they see something that's a little bit beyond what they were budgeting for, that they can still have the confidence to buy it. And again, we break all of that out in total down payment, closing costs, taxes, and insurance. A lot of the things that Elaine had covered before. And that's the follow-up call. We go through all of that. And then you get that letter, you meet with someone like Elaine, you go out and start looking at homes. If you like a home or it seem interesting, you can share that home with us. We'll rerun numbers, refresh numbers, so you know exactly what you're looking at as far as the down payment, closing costs, taxes, and insurance. And the most important one is the monthly payment, whether you're still within the budget that you're looking for. We work as a team, so we have a very good process. Each one of us is good at one thing. So when you're meeting with me, we have that initial consult. And then when you do the pre-approval, you go out and start working with your real estate agent, whether that be Elaine or whoever you're working with. When you find a home, then again, we'll start the process of getting the keys to get you to closing and get you the keys to the home. Let's see here. The thing that's a little different, and I think I might have skipped on that, is that, again, we really spend a lot of time up front to know more about you. We're not just about transactional. We're more understanding where you're coming from, what your challenges are, what are you looking for. And that's kind of like what differentiates us to other lenders, is to really help you identify those things that you're thinking about and making sure that we address them so you're prepared to become a homeowner. Finding a home is the easy part. Owning that home also comes with a lot of responsibility. It comes with maintenance. It comes with, appliances like Elaine kind of touched on. So we want to make sure that you understand all of that. There's a lot of programs that she touched on, which is the down payment assistance. We can explore all of that. If you have your own resources, you can explore comparing whether it makes sense for you to use your own resources or use some of the down payment assistance program. It's always good to have those conversations and those options so you know what you're getting into. Because again, getting a home is the easy part. Actually owning that home and having the responsibility of being a homeowner is really important as well. That's really all I want to talk about. But if anybody has any question, they can ask any questions.
Wonderful. Yeah. So one question, a couple of questions came in, and please send us more if you have them. Please explain how I can buy a home in Baltimore County area that is vacant and need major repairs. Are there any programs or anything that, as a lender, that they might be able to look for while working with theirs?
Yeah, the Baltimore area is a great area. There's a lot of program, and I imagine Frank will touch on to that. There's a lot of down payment assistance program in Baltimore, including the Maryland Mortgage Program that you can combine. There is also a program for the vacant property. I believe they give up to $10,000 if it is on the vacant list for the city of Baltimore. And then I believe also Maryland Mortgage Program is coming up with a 203K, which most lenders, some lenders are approved to offer. They give you up to $75,000 to fix up the property. So I hope that answers your question.
I would say it does. When a buyer is pre-approved, how long do they have before that the letter expires?
90 days is the typical pre-approval expiration date. However, we can extend that pre-approval for as long as you need it to, and we don't need to refresh credit or do any that stuff as long as nothing has changed. If you're telling us, and again, all of this come down to communication, right? So we're communicating with you, and we expect that you're expecting us to communicate with you as well. So we expect the same thing, just making sure that if your job is different, let us know ahead. But we will keep that pre-approval for as long as you need it. We've had clients looking for home now for about 2-3 years, and they're still pre-approved, only because we're still following up with them. We're communicating on a monthly basis, letting them know that, if they need something, but we can keep that for as long as you need. There's really no expiration.
Great. No expiration sounds like as long as they're in communication with their lender and staying in touch and all of that.
Yeah.
Great. A question about expenses in terms of buying a single family home and a townhouse or condo. Is it more expensive? And I think also, Paul, if you wouldn't mind being able to touch on those monthly expenses, how they kind of differ, if at all, between a single family and townhouse and condo.
Yeah, so let's start with the basic. Any home that you're gonna borrow money on, you're gonna have the loan payment, which is the principal and interest. So that's whatever type of property, that's always going to be applicable if you are borrowing money to buy the house. Then you have property taxes. That's one that I think a lot of people forget about when they're talking about. Initially, when I'm having a conversation with most of my clients, they focus on the loan payment, the principal and interest. And they throw out a budget saying, I want my mortgage payment to be $2,200, but I want to live in Montgomery County. Well, that's probably going to happen if you're just borrowing that money. But let's not forget that there are taxes. The county will require that you pay property taxes on that house. So we have to also budget for that. So there's a couple of components of your mortgage or your house payment. You have the principal and interest, which is the mortgage you're paying back to the bank. Then you have taxes and insurance, which taxes you pay to the county, and the insurance you're paying to whomever the insurance company that you're using, whether it be Allstate, State Farm. And then if you're putting less than 20% down, then most likely you're also paying private mortgage insurance if you're using a conventional loan. Or if you're using a government loan like an FHA loan, then you're paying mortgage insurance premium. Then the difference between a single family home, a townhouse, and a condo is that some may come with some type of association fee, whether it's a condo fee or a homeowners association fee. That can be the difference between those three types of property. Some single family home may not have a homeowners association fee, but in our area, it's pretty standard that most of the community most of the property are in a community that you're paying some type of homeowners association or a condo fee. If you're buying a single family home, the association fee is going to be cheaper because they don't charge as much. If you're buying a townhouse, it's a little bit more. If you're buying a condo, you may buy that condo at a lower price, but the condo fee may be higher than a single family home or a townhouse.
Awesome. All right, and one more question before we move on. Can you talk a little bit about buying down your interest rate and how points work and kind of the pros and cons of paying them?
Yeah, it's different for everyone. Paying points is paying more upfront in fees to buy down the interest rate. So let's just say today's interest rate is 6.5. That's what the standard interest rate is. Again, I'm just quoting a rate right now. Just assuming that it is 6.5%, and you want to buy down that rate, and you let's say that you want to pay a point. So a point is a percentage of your loan amount. So if you're borrowing 100,000 and the rate currently is at 6.5, but you really want it to be lower and you pay 1%, so you're paying $1,000 more upfront, then you could potentially buy down that interest rate from 6.5 to say 6.25. The rule of thumb is that when you're paying a point, it's not 1 for 1. It's not like you're paying 1% and then you drop the interest rate by 1%. It's usually about 0.25%. Sometimes can be a little bit more than 0.25%, but that's kind of the range. So if you wanted to pay a point, you may improve that interest rate from 6.5 to say 6.25%. But now you're costing, it's costing you $1,000 more upfront. So again, those are things that we'll go over when you're pre-approved and when you're running numbers to see what makes sense, because it's different for everyone. Sometimes it may make sense to pay the point because you're looking for a write-off. And so, or you may be getting seller concession where you're saying, okay, well, I know I'm getting money from the seller to help me with closing costs. And I also am looking for a write-off on my taxes, because paying the points can be a write-off when you file your taxes. And you want to take advantage of that, we can have that conversation and have a plan to take advantage of that.
Awesome. Thank you so much, Paul. And now we're going to go and head over to Jim.
Excellent.
Okay. Well, thank you, Jackie. As I always say, Maryland Realtors is providing a great service to the people in the state of Maryland by, really conducting these webinars, because you're getting a chance to hear, important information from subject matter experts like Elaine and Paul, because, the home buying process and the mortgage application process can be very confusing and very challenging. So, I applaud all of you for, registering for this webinar and tuning in. So I'm Jim Hall. I'm a senior affordable lending manager with Freddie Mac. Now, Freddie Mac is a mortgage company, but we're in the secondary mortgage market. So we are not in competition with Paul and Vellum Mortgage because we don't lend directly to the public. We're in the background and we provide liquidity and buy mortgages from companies like Vellum Mortgage and also our business partner at the Maryland Mortgage Program. So what that does, it continues to put cash in the markets so lenders can get out there and really present innovative loan programs to yourselves. Now, I'm not going to do a deep dive into the mortgage programs here because that's why we have Paul and Frank on our dais tonight. But, we do have a 3% down program, a 97% loan to value program, which lenders can offer to you through the Maryland Mortgage Program. So it's really, really, a nice program where you don't have to, utilize all your funds and put a lot of money down on that. One of our major pillars here at Freddie Mac is education. And what I'm going to do is share my screen now. And again, like I said, you're gaining a lot of, information tonight from, these great subject matter experts that have given their time to speak with you. But you're going to be able to walk away with something also. Our Credit Smart program is Freddie Mac's financial literacy tool. Now, this is something that we don't make people pay for, but there's a lot of, lot of information in here that will help you, understand the home buying process and the mortgage application process much better, because it's really important for you to be able to converse with your realtor and your loan officer and understand, what they're talking about. And, it's not Freddie Mac's intent to turn you into a realtor or turn you into a mortgage professional. But again, this is probably the biggest financial decision you're going to make in your life. And we want you to fully understand what you're getting involved with, because, it was mentioned earlier, it can be easy to buy the house and get the mortgage, but, being a homeowner, it's a long-term event. And we want you to understand that, making that monthly payment and the importance of it, and also gaining equity, because, this is a financial investment for you. So you'll be gaining equity through the process of home ownership. And it's very, very important for you to realize that. So Freddie Mac over 20 years ago created Credit Smart specifically for you, the consumer, to utilize. Now, Jackie and Maryland Realtors will be sending you copies of these slides. So on slide number 1 here in the bottom right-hand corner is the web address for Credit Smart, which you can go and check out and hopefully utilize. So it's very interactive. We enhanced it within the last couple years to make it more attractive for people to use online. So what we did, we broke it into 2 sides: the financial capability side and the home ownership education side. So the financial capability side has what we call the essentials portion, and the home ownership education side has the home buyer U. So again, like I said, it's all interactive, it's online. Here on slide number 3, you can see you can set up your own dashboard, you can personalize it, you can set up your own notebook, set your own goals, track your progress. So it's really, really, something that, we hope that, you realize the importance of, and also the ease of using it. So again, like I said, it's very interactive. It's not something that you do in one setting, especially the essentials side. The Credit Smart Essentials is for your whole home ownership journey. So this is something that will help you from day one to the point, if you want to sell the house eventually, and then, be a repeat buyer and go back to Elaine and, buy your second house. This will help you go through that process. So it will help you to set goals, the importance of earning and then spending, and also teaching you how to be a savvy borrower, planning to save and preparing and protect. And so, you'll learn how to budget, because it's not all about the mortgage payment. You're going to have other essentials that you have to take care of, like the electric bill, the water bill, and there's things that you need to buy to maintain the house, to furnish the house. So there's no harm in learning what a debit and a credit is and how it works. I've been around a long time. My wife and I, we bought our first house 35 years ago in 1990. And I can remember my father telling me, Jim, you need a rainy day fund. And I was like, well, Dad, what's a rainy day fund? And he said, well, you're going to be a homeowner now, and things are going to happen out of the blue, and you're going to need some quick cash. And I was thinking, okay, he just doesn't want me to go back to him and ask him for money. That's why he wants me to set up a rainy day fund. But he had wisdom. And I can remember our second year in home ownership, my wife and I came home from work, and we found out our basement was flooded, our water heater broke, and the basement was partially renovated, and the rugs were ruined, and I needed some quick cash and everything to clean that mess up. And so it's important, like I said, to have that quick cash on hand. And also preparing and protect. Okay, again, it's a major asset for you. We want you to be able to, at all costs, prepare and protect that asset, because it's your home and you'll be gaining equity in it. Now, the home buyer use side, that is for the immediate, okay? That's for when you're working with your realtor and your loan officer. And this is only 6 modules, and it shouldn't take you more than 2 to 3 hours to complete. And once you do complete it, you have to pass a quiz at the end and achieve 80% or higher. And once you pass that quiz, you get a diploma, you get a completion certificate that meets national industry standards for homeownership education and counseling. And it's good for 12 months. So, I'm an old originator myself. So, if I'm sitting at Paul's desk and, you took my advice and, you went through Homebuyer U, you went through all the modules, you passed the test, and now you have that diploma. I know that's go time. It's my job to make sure that I get you approved for that mortgage and get you to the closing table. So again, all of this is free to you. There's no cost. So please, after this webinar, check it out, and hopefully you'll take advantage of it. And Jackie, I am done. If there's any questions, I'd be happy to answer. And if not, I'm going to turn it over to my friend Frank at the Maryland Mortgage Program.
Yeah, we have none in the chat right now, so I think we just go ahead and Frank, if you want to get started, we'll circle back to any questions that we have at the end of all of our presentations.
Unmute. All right, thank you. I appreciate it. Can you guys see the Maryland Mortgage Program website?
Yes, we can.
All right, so I want to thank, first of all, Maryland Realtors for putting this together every month. And a lot of work goes into it. And really, it was just a snapshot, just to give you an idea of how to get started and where to go. The Maryland Mortgage Program is a department of the Maryland Department of Housing and Community Development. And what you're looking at right here is our website. And if I can make this a little smaller, you can see the whole website. So consider coming to our website at mmp.maryland.gov, mmp.maryland.gov. We are part of the Department of Housing and Community Development, but if you Google the Maryland Department of Housing and Community Development, it's going to take you to a whole different website. So you want to go to mmp.maryland.gov for you to be able to get started. So I do want to commend that we have a really knowledgeable loan officer with Bella Mortgage. Paul actually gets leads from the department. So he's a top producing loan officer with Bellum, and he does a lot of Maryland Mortgage Program loans. And when you do a lot of loans with the department will reward those top producers with leads. And what's the lead? So if you come to our website and you request to talk to a lender, we can set you up to talk to Paul or to whoever you want to talk to. So if you want to talk to a lender, we can hook you up with a lender in the community where you want to purchase a home. Let me see if it works. So you can put in that information in there, your phone number, you select the county where you like to purchase a home, and we'll send you to a top producing loan officer in that county. Now, off the top of my head, I don't know what counties Paul gets leads on, but I'm going to assume it's probably Montgomery County, maybe Prince George's County, so on and so forth. But he can correct the record if that's okay in a minute. So you can choose a lender from our website. We have a lot of lenders with the Maryland Mortgage Program. We have about 120 lenders. And so there's big lenders, there's smaller lenders, there's community banks, there's savings and loans. So, and the key is that you're not going to come to the state of Maryland to actually get a mortgage from us. You're going to go to a participating lender. So I'm going to take you to this place called the Professional Portal. Anyone can come to this. It's not just for loan professionals to come to it. We're going to bypass a couple of things, but I do want to show you a couple of things that the lender has to do to determine eligibility for the Maryland Mortgage Program. So there's 6 main eligibility guidelines, and I'm not going to go through all of them because it's just going to be too much information. But the most important things that you need to know is that the lender is going to make sure there's homebuyer education. So Credit Smart is a good tool to have because homebuyer education is one of the requirements for the Maryland Mortgage Program. It's actually, we'll need a copy of that certificate in your file for the file to be approved, okay? So another thing that we require is that you meet household and purchase limits for the Maryland Mortgage Program. It has lots of information in here. I'm just gonna pull up the standard income and purchase limits for the Maryland Mortgage Program just to give you an idea. And we can get this information back to you. That's not a problem because this is just a fast thing. But if you just look at Baltimore City, the income limits in Baltimore City for a household of 1 or 2 is 149,400. Household of 3 or more is 174,300. In other counties, if we go to Prince George's County, household of 1 or 2 is 185,640 or 216,580. So the income limits are pretty high. Now, as far as down payment assistance with the Maryland Mortgage Program, we have a menu of programs, and it's not really for you to determine what program you qualify for. Really, that's between you and LO to decide what program works best for you and for your needs and what you're looking at. So these are today's rates. Our rates come out at 10 o'clock every morning, and we have two sides to it. We have a first-time advantage side. On the first-time advantage side, you must be a first-time home buyer. And really, like 90% of the home buyers that use the Merrill Mortgage Program fall under this yellow side of the rate sheet. We also have a flex side where you can be a repeat buyer, okay? And if you're a repeat buyer, meaning that you've been a homeowner in the past 3 years, you don't qualify as a first-time home buyer, but you can still use the Merrill Mortgage Program. Say you're coming out of a divorce or that kind of situation. So you can purchase using the flex side. On the first-time advantage side, you must be a first-time home buyer. What makes you a first-time home buyer? There's 3 ways the department's looking at, and the lenders know this. The first one is if you never owned a home before, then you're truly a first-time home buyer. And that would be you haven't owned a home anywhere in the world. The second way you can qualify as a first-time home buyer, if you haven't been on a deed of a primary residence in the last 3 years, you can also qualify as a first-time home buyer. And the third way you can qualify as a first-time home buyer would be, third way you can qualify as a first-time home buyer would be if you're active military or a veteran, you can also qualify as a first-time home buyer. And that's even if you owned the home before. So if you're a veteran, active duty military, you can qualify as first-time home buyer and be able to use the Merrill Mortgage Program. There's another way you can qualify as a first-time home buyer. For the Merrill Mortgage Program, if you're purchasing a home in a targeted area, and there's a mapping tool, there's really just lots of information. We're not going to be able to get to all of it. If you're purchasing a home in a targeted area, you may qualify as a first-time home buyer, even if you owned the home last year, or you were looking here to buy a home because you didn't think you qualified, but you can move here if you're purchasing in a targeted area. Some areas are fully targeted, like counties. Counties in Western Maryland, we have Allegheny County and Garrett County. Those are fully targeted. Baltimore City is fully targeted. Counties in the Eastern Shore, such as Kent County, Caroline County, Somerset County, those are fully targeted as well, and maybe a couple more, maybe Talbot County as well. And for other counties, you need to be able to go to the mapper, and I'll show you the mapper in a minute. I'm going to show you the mapper last, because it's pretty interesting, because you can play around with the mapper yourself just to see, because sometimes you don't know where you're purchasing a home, and you just want to get an idea. Can I purchase in Baltimore County? Should I purchase in Baltimore City, Hartford County, Cecil, however. So the first-time advantage side, we have the first-time advantage direct. That's our lowest rate. That's our lowest rate today. It's 2.25% for government. Government would be FHA, VA, and rural housing. Typically, the conventional rate's going to be a little bit higher, but the mortgage insurance will be lower. So it's just something that you have to discuss with your loan officer. And like I said, you have to be working with a lender that's approved by the Merrill Mortgage Program. We have 120 lenders. You can definitely talk to Paul. He's knowledgeable and experienced with the Merrill Mortgage Program. And then we have different programs. We have the 6,000 series, gives you 6,000 in down payment assistance, but you can get a partner match. A partner match could be an employer, could be a builder, it could be a community program, it could be a city, it could be a county. And so if you get a match, you can get an additional 2,500 on top of the 6,000. I do want to say all the monies that you can get for down payment and closing cost assistance from the state must be paid back when you sell the house, refinance, or no longer live in the property. These are not grants. These are loans from the state. They have 0% interest. It just sits there as a silent second. You don't have to make a payment on it. But when you sell the house or refinance or no longer live in the property, say you buy another home and you want to keep that one as a rental, you will have to refinance out of our mortgage and pay us back the money that you borrowed from us. The biggest reservation winner, the biggest product that we have right now is the first-time advantage 5% loan product right here, and that's the rate today. The rates have been decreasing a little bit. It used to be over 7 a couple of weeks ago. And in that case, the 5% product gives you 5% of the first loan amount towards down payment and closing cost assistance. The important thing you need to know is that our down payment assistance can qualify as your minimum contribution. So conceivably, you can buy a home with the Merrill Mortgage Program with very little money out of your own pocket, because considering that you may only need 3% or 3.5% for down payment, you have 1.5%, you have 2% or 1.5% that you can use towards closing costs. And if you're getting some seller help, voila, you may be able to be in the home with very little money out of your own pocket. We have this product called Home Start. It's for borrowers below 50% of AMI. What's that? 50% of AMI is a number, it's a income number. And if I'm just going to go back to the income limits for a second, I want to be able to pull it up to 50% area income limits. If you're below these income limits in the Baltimore areas, would be 61,100. In the DC area would be about 76,450. You may be able to use Home Start. And with Home Start, you may be able to get 6% in down payment assistance. Likewise, we also list the 80% of AMI. These are the numbers that Fannie and Freddie will use for a program called HFA Preferred or HFA Advantage, which may give you a reduced rate on your mortgage insurance from 35% all the way down to 6%. It's a lot of information, I know. But I just want to give you an idea that there's lots of programs and not just one program that we have. And the income limits for the 80% of AMI in the DC area is 122,320. In the Baltimore area is 97,760. So we click back again, and back to the interest rates for a second. I want to show you Home Start, and Home Start can give you up to 6% in down payment assistance, and the interest rate, and that's the interest rate today. We also do 203K limited. There was a question regarding rehabbing a home. If it's a substantial rehab, chances are it's not going to qualify for the Maryland Mortgage Program. You may want to talk to Paul by doing a 203K FHA with them, or maybe Fannie and Freddie have another product that can help you with that. We just started the 203K limited, which means it's more for cosmetic issues with the home. Maybe you want to rip out the floors, put in new flooring, or maybe you want to redo a bathroom, but it's not going to help you with, structural deficits to the home that need to be fixed, or you need substantial fixes, or put in a brand new roof, or, or break out things and have an addition, that kind of thing. Specialty loan products, we have a couple right now. The MedPal product is for home buyers and they're purchasing in Montgomery County. This is money from Montgomery County for their employees to be able to buy a home, and comes with a $25,000 DPA loan. That's the interest rates today. And of course, MMP has the Maryland Smart Buy, allows first-time buyers, student loan debt to be able to buy a home. It is a conventional product only, so you have to be able to qualify for a conventional loan through a participating lender. And we have an option with no DPA. We have an option with $6,000 in down payment assistance, or an option if you're below 50% of AMI, just like Home Start, and you have student loan debt, we can pay that off and give you 6% in down payment assistance. Now, the up to $20,000 in student loan debt that can be paid off at closing, that's actually forgivable. So you pay off all your student loan debt. How great can that be, right? And if you stay in the home for 5 years, we'll forgive that amount of money, up to $20,000. Now, if you refinance in the future, you can. If you borrow any DPA, you'll have to pay it back. If you didn't borrow any DPA from us, then you don't have to pay it back. An option that's really very popular with us is the First Time Advantage Direct. This comes with no down payment assistance from the department. How can they help you? Well, it gives you a really low interest rate. That's the lowest rate that you're going to get in the market with no points. MMP loans have no points, so you can't buy it down. We don't do adjustable rate mortgages. We don't do buy downs. So basically, that's the rate. But if you can use our lowest rate for government is 2.25. For government, for conventional would be 6.5. And you combine that with the city program or a county program, and you use their money for down payment assistance, and you can use our money for the first mortgage. It's a win-win because you get the lowest rate that you can get at this point in the market, and you can get down payment assistance from a city or a county. And in some cases, some of that money may be forgivable. I don't always know that that's the case, but that's something you should consider and take advantage of that. If you're purchasing typically in Baltimore City, there's the vacancy value program that Paul mentioned, and they have other programs in Baltimore City, and other counties may have other programs as well. Just be mindful to take home buyer education. That's a requirement for us. If you're purchasing in counties that have specific requirements regarding housing counseling, sometimes they require you to obtain the counseling prior to putting a contract on a home. So you'd be wise to take the class from Freddie Mac. Just take it this week. It'll be good for a year, and it'll allow you to purchase a home without having to worry, oh, we can't put in an offer today because we haven't taken the class yet. Just take the class, get that off your crossed off your needs to-do list, and be able to get started with the Maryland Mortgage Program, possibly. The Mapper, I want to mention the Mapper. The Mapper is a tool from the Maryland Department of Planning. In it, you can find targeted areas. Targeted areas are areas that are designated by HUD. It's areas where you can qualify as a first-time home buyer. You may be able to qualify at a higher income limit, or you may qualify at a higher acquisition cost. We also have priority funding areas. Priority funding areas are areas where you can use MMP for a new build. So if you're buying a new home, for MMP will have to be in a priority funding area. And those are targeted areas, federal priority funding areas, state of Maryland. And the Mapper itself is a tool from the Maryland Department of Planning. And I'm just going to plug in an address, see if we have time. And this is where I live, so don't come to my house. This is where I home. I live in Harford County, and I am home right now. When you plug in my address, it says it's priority funding. So if it's a new build and they're building new houses here somewhere, it qualifies for MMP funding because it's in the priority funding area. Notice it doesn't say targeted, which means that it's not targeted. Okay, so if you click on priority funding, it'll tell you that it's in. So it's a good tool for you to have. I suggest that you come to our website, mmp.maryland.gov, and just plug in Maryland Mapper. If you don't know how to navigate through it, you can just come here to the search bar and put in Mapper. And you click on that, and it'll take you right to the Mapper. If you want to know where the interest rates are and you forgot how we got to that, you can put in interest rates and hit enter, and takes you right to the interest rates. If you want to get lenders, list of lenders, you can hit lenders, enter, and take you to a list of lenders with the Maryland Mortgage Program. And you can get, these are Smart Buy lenders. So that would be for Smart Buy, sorry. Let me do lenders again. I just clicked on the wrong link. Lenders again, hit that. Find the lender. So lenders takes you to the Smart Buy, but find the lender takes you to the interactive. You can get a printable list of approved lenders, and we have them all here. All the lenders that do the Maryland Mortgage Program are listed in here, big, small, in between. They're all listed in here. They're all approved to do the Maryland Mortgage Program. If you want to do it by county, you can just pick the county that you're interested in purchasing. Say you're looking to purchase in Prince George's County, and you get the logos of the lenders that are included for Prince George's County. Again, I would, if I were you, I would just go to Paul. Paul really knows the Maryland Mortgage Program well. Again, like I said, he gets leads from the department, which to us it proves that he really knows the Maryland Mortgage Program. And really, there's no one program that's going to be the program for you. You just need to be able to go to a participating lender. Are you guys still seeing me?
Yeah,
You
we are.
Okay. All right. I don't know that I have any more. I talked a lot, so I tried to do it fast. We'll see if we can get you some information for you to have. And I'm open for any questions anyone may have.
Outstanding. Thank you so much, Frank. We don't currently have any questions, but we can
All
wait
right.
around for a minute or two. And if anyone has any watching, please feel free to add them. But thank you all so much for presenting. This was
All right,
great.
no problem. Yeah, it's my pleasure. I love doing it. I don't do it often, as you know, because Catherine usually does it. But I do want to say that Paul does do the Maryland Mortgage Program often. And are you still getting leads from the department, Paul?
Yeah, interestingly, I have not.
You have not.
Yeah,
I know
have
I
not.
saw you on the lead list like a couple of months. I don't have access to it, but I was just happened to be in my boss's office, and I looked over and I kind of saw a couple of people that I knew. So which county were you getting leads?
I'm getting from Montgomery County, Frederick, and PG.
Okay. Because
They're all over the place. I mean, there's some that's like for some reason or another, they're coming from Virginia and they're looking
Okay.
for the Virginia.
Right.
So,
Yeah. And you do programs in Virginia and DC as well, right?
we do.
Do you do
Yeah.
DC open doors?
We do. Yeah.
I don't want to plug the
Yeah, we don't want to
competition,
plug
but-
those. That's why I
but-
didn't mention
No,
them.
but people want to
because-
purchase where they want to purchase. You know, I mean, Elaine, I'm sure you work with people. Do you work in Virginia too, or just DC and Maryland?
Just DC and Maryland.
Okay,
Yeah.
so
Mhm.
somebody wants to purchase in DC. I mean, we can't keep them from it.
That's
People
right.
want to buy where they want to buy, right? That's what we just. we want
That's
them to
why we
buy
say
in
we
Maryland, but
explore
not
all their
everybody's gonna
options,
buy it.
right?
Yes,
So-
we're here to service our clients.
Exactly.
Yeah, absolutely. Yeah, it's the most important thing.
Yes.
All right.
So-
No questions have come through, so I think we can be done for the evening. Thank you all so much.
Thank
And
you.
with
Thank
that,
you.
thank you again for all of your attendance. And as a reminder, our next Your Home Buying Keys webinar is on April 10th, also from 6:30 to 7:30 p.m. Please share that date with anyone you think would benefit from this information or another soon-to-be home buyer in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. We wish you all the success in your journey. And if you have any questions, please email webinar@mdrealtor.org. Thank you all so much.
Thank you.